Wall Street Madness, Human Psychology and Investing, July 17, 2025. My New York Stock Exchange closing commentary. Wall Street is following the age-old familiar pattern and climbing the wall of worry. Today, S&P 500 and Nasdaq indexes have hit all-time high. I have seen this drama unfold over and over, time after time, since the mid-1970s. Only one or two may be alive today, including myself, to tell you these bipolar madness stories of Wall Street and LaSalle Street. Momentum is up. Fear of missing out, or FOMO, psychology has gripped Wall Street once again. Sophisticated retail investors first came to the party. Now the institutional investors are scrambling to get into the game. One pundit even prognosticates that S&P 500 index may rise up to 7,500. 10-week-old fear and capitulation of market bottom have melted away. Market is suffering once again from euphoria, greed, and early speculative fever. Many a bubble may form any week or month now. Initial public offering, merger and acquisition markets, and meme stocks are up and running once again. For a senior citizen retail investor like myself, Wall Street looks like an organized casino at times. It may be a random walk on Wall Street as well. Making quick money can be exhilarating in short term, but losing the last shirt can even be more devastating, especially for senior citizens like myself. It may be a yellow light of caution for short-term investors, traders, and elderly retail investors like myself. Long-term young and middle-aged retail investors may not have to worry. They can afford to stay put with their broadly diversified long-term portfolios of equity mutual funds and exchange-traded funds, or ETFs, of reputable companies. A mild to moderate amount of U.S. treasuries and money market cash may add stability. A very small allocation of precious metals like gold and silver and cryptocurrencies may also help. I have mixed opinions regarding owning versus renting real estate. Home prices and interest rates are simply just too high to own. For non-farmers, farmland investment may not make much sense. Today, stock market is expensive by all metrics. Schiller PE 500 index is higher than 38. In last 150 years, it was higher than this only one time. The Buffett indicator valuation ratio at 209% is in significantly overvalued territory. This indicator has reached levels close to or above 200% during the dot-com bubble and before the 2008 financial crisis. It may suggest that the stock market may be inflated relative to the underlying economy. S&P 500 trailing PE index is elevated about 28. Of course, no index or indicator is perfect and 100% foolproof. But fear of missing out or FOMO psychology may drive the market some 8 to 11% higher from these levels of 6,300 on S&P 500 in short term before a decent correction may set in. Is this a market melt-up? Maybe, or maybe not. There is an age-old saying on Wall Street, buy on rumors and sell on news. I nibbled since February 2025 based on rumors, and now all those rumors are open secrets. Therefore, I have stopped buying and started trimming because I am an elderly retail investor. One can rightly argue that I had no business of being in the stock market in the first place. If I'm wrong, time will not bail me out. Most of my educated guesses from my iMovie titled New York Stock Exchange Bipolar Mentality dated June 6, 2025 are falling in place one by one. Maybe it is time for me to slowly prune my portfolio, reduce the exposure to stock market, and start searching for an exit. It may be a bit too early to exit, but there is no harm in searching and keeping an eye on the exit. Summary. I am a senior retail investor living on borrowed times. I have stopped buying totally 2 weeks ago. Instead, I have started pruning and trimming my portfolio ever so slowly to raise cash and spread into less risky bond funds and bond ETFs. Interests may come down any month now. As markets rise higher and higher, I will intensify my selling. I will start looking for an exit. Young and middle-aged, long-term, educated retail investors need not follow me. My disclosures. I have no conflicts of interests. I am neither a financial consultant nor have I ever undergone any formal training in money matters. I am a retail investor since the mid-1970s and a Wall Street survivor. I may be a student of money for life. Please stop and invest your money at your own risk. Written, edited, narrated and produced by Dr. M.S. Patel. Beyond the shadow of doubt. From the very heart of Chicago's financial district. July 17, 2025. Thank you kindly.